Hey everyone, welcome back to Streetwise Economics. Just a quick heads up, in case you didn't watch the last video, by the time you are watching this, I'm actually in Switzerland on a family vacation, exploring how the world's richest countries stay wealthy. And I'll be sharing some more insights about what I learned in future videos. So stay tuned. Now, let's talk about trading. A quick disclaimer though, just like investing, trading comes with both risks and rewards. So this isn't financial advice, just me sharing what I've learned after placing over 100 trades as part of my trading journey. And if you have been following, you probably have seen some videos on my trading journey. So if you are new to trading or wondering why 90% of traders lose 90% of their accounts in their first 90 days, this video is for you. I will break down what has helped me to go from 21K to over 26K since January this year. And I'm recording this on the 10th of April. And yes, that's almost 23% return in just over 3 months, while the S&P 500 is actually down year to date by 10%. Now, lesson number one is risk management is everything. I never risk my whole portfolio or even a big chunk. I only risk a small portion per trade. Think of your portfolio like a garden. You wouldn't bet the whole crop on one seed, right? So, lesson number two, focus on few stocks that you understand. I only trade stocks that I deeply understand, and I have a watch list of stocks that I understand. I listen to their earnings. I understand their financials for years, and I look at the insiders. Are they selling? Are they buying? I track those things. And of course, that's my full-time job that I do. More like an analyst you see at Wall Street. That's what they do. They focus and do deep dive. So this year, with President Trump's tariffs, which have created a ton of volatility, it's important to adapt to the market shifts. So for me, this has been key. In the past, I used to trade volatility through VIX ETFs. And if you don't know, the VIX basically is commonly referred to as the fear and greed gauge. Sometimes when the market is usually going up, people tend to be greedy and think that it might continue to go up. Usually the VIX in that case would be indicating a different metric. If now, conversely, if people are more bullish, are more bearish, in other words, there's a lot of fear, usually it's at the high end, right? So it's more like investor related. In this case, like I said, when people are greedy, it's going up, it's kind of like very low. So that's when I'm trading it, because if something happens, then most likely it's going to spike, because people usually become fearful when the market drops, or there's something that they may consider to potentially cause the market to drop. So I kind of like reassess the situation over time. So that's what I used to do. I used to just trade that when it was low at the beginning of the year, and also starting from around August 2024. But I had spent time just waking up, observing, and of course, I'm an economist, so I had kind of an idea of how things work. But I didn't know, and up to now, I don't know everything. I'm learning every day. So when the volatility changed the direction with President Trump coming into office, that strategy stopped working. And I realized I needed to make money where that the markets go up or down or sideways. Otherwise, my trading career was done. And that's how I survive. I survive on trading and doing other things like investing, of course. But I had to find a way to pivot away from that strategy, because the VIX was now very risky to trade, because when there's a lot of fear, it's now at the top. So suddenly, if there is certainty, it might drop. I was talking to my uncle recently, and I'm recording this video on the 10th of April, 2025. And the ETF that we trade, I think the ticker name is UVIX, if you check it out. it was like trading at 125. I think it went to that level. But within some minutes, it drops, right? It dropped to almost, I think, 70, and I think even to almost below 50. So if you get in at that point, oh, it has to take an extraordinary event for it to go up again to that level if fear becomes elevated. So for me, it means the risks are quite elevated in that regard. So I had to look for other strategies. So that brings me to lesson number 3. Now, it's important to use the right tools, not just hope. Now, I use spreads like vertical call spreads and vertical put spreads. So let me break down that simply for you, even though I've done some videos in the past. A vertical call spread is when you expect the stock to go up, but want to reduce risk. Whilst a vertical put spread is when you expect it to go down. These are more controlled, high probability setups, in my view. They are way less risky than naked options, like just a call. If you are bullish, you consider that the market or the security that you're trading is likely going to go up. I say likely because when you are trading or investing, it's about probability, because you could be wrong. There's probability of success and probability of failure. So that's how you become a successful trader, rather than just looking at it as it's going to be a 100% probability of winning. So I've explained this in the past videos, so you can dig up in some videos on this channel to learn more about this. Then lesson number 4, no more naked options. I learned the hard way. Believe me, believe you me, back in 2024, I lost money trading naked options. Basically, placing high risk bets with no protection. So it felt like gambling. So now I stick to safer strategies, and I do stocks, right covered calls, cash secured puts. In other words, I use it when I want to own a stock at a discount. For example, with Sophie, right? I sell puts at a price I'm comfortable buying the stock and get paid to wait. For example, today I did 10 contracts for Sophie. I took a cash secured puts. I took a strike price of $9.50. Right now, on the 10th of April, it closed the day at $10.52, right? So if Sophie doesn't drop below $9.50, still for the 10 contracts, I will get $60. And this was like a 2-day trade, $60, right? And I should have 9,500 at least in the account for in case it drops to $9.50. If it drops to zero, then the risk is that I will still be obligated to buy it at $9.50. But that's why it's important to understand the fundamentals. Now, if it closes above $9.50, I keep the premium. That's the deal. But I want to buy it cheaper. Now, I also use covered calls. I do with stocks that I already own. For example, I own Amazon, more than 100 shares, for example. And then let's say Google as an example. So what I do is when I already own those stocks, I then sell covered calls. In other words, I sell call options on it, and every week or every month I collect income. It's like renting out your stocks, because what happens is, like, let's say, let me give you an example of Walmart. I actually have an option contract for Walmart that has a strike price of $90, but my average price is $85.97. So I took a strike price to say, okay, if Walmart gets to uh, a strike price of $90 in a week, right? So I got, I think, let's say $41, 41 cents, but one option contract is 100 units. So that's $41. So by the end of the week, if it gets to $90, I make the profit, the difference between $90 and 53, $85.97 for the 100 shares that I own. That's the profit that I'll still make. But in addition, I will get the premium, but my shares will be gone. But let's say now it goes to 99, I lose the potential upside. If it goes down, in that case, I can be protected at least to the extent of my premium, right? But the thing is, I do fundamental analysis for this stock, and right now with what is happening, people still want to eat, so I believe Walmart is a fundamentally strong stock. Again, this is not a recommendation, it's just educational. So lesson number 5 your mindset is half the game. What do I mean by this? The market doesn't care about your feelings. I've learned that success in trading comes down to 3 key things: patience, discipline, and emotional control. If you don't sleep enough or you are trading when stressed, you are more likely to make dumb mistakes. Treat market with humility and respect. And more like you are waking up, you are going to work. It's important to have proper sleep. And I don't like to trade when I'm stressed. I have to be in a mentally stable state. So here is a formula I use mentally. Now, for those who like mathematics, there's this formula to say expected probability of success, right, is equal to probability of win times the size of win. Let's say you win 10 times, right? Let's say you win 8 times out of the 10 times that you do. So in that case, you would lose the 2 times, right? Now, the expected probability of success is equal to probability of win times the size of win minus the probability of loss times success loss. So I put it on this screen so that you can see this. So I always assume the worst case scenario, right? So that's what I do. I plan for the loss, and then most new traders, they assume that they will win every trade. I do the opposite. I assume that I'm going to lose this trade. So am I comfortable losing this amount? So if I get a profit or an upside, that's fine. So that's the goal. So if I don't understand the setup and I don't have time to do proper research, I don't trade. As simple as that. Now, if you are thinking of trading as something you think you would get rich quickly, no, trading is not a get rich quick scheme. It's not, in my experience. Like I said, most people, 90% of retail traders, they lose 90%, they blow 90% of their account, trading account, within the first 90 days of their starting trading. Those are statistical facts. But trading, in my experience, it's a skill you can learn with the right mindset and strategies. I focus mostly in the US market because of high liquidity and better options trading structure, but also even the stocks, especially in the service sector, and they have wonderful businesses. Also in Canada, they are also wonderful businesses. And yes, you can also trade remotely. I will be even keeping an eye on the markets while I'm in Switzerland. So if you're a beginner and want to learn how to trade profitably, I offer coaching on www.streetwiseeconomics.com. Drop a comment below if you are trading already or you want to get started. And hey, don't forget to subscribe so you don't miss any of my upcoming videos from Switzerland. I will be sharing what I learn about wealth, global investing, and maybe even some chocolate economics from the Lind factory. Until next time, trade smart, stay patient, and keep it up streetwise. Thank you and bye-bye for now. See you in the next video.